you want to have some volatility for the asset class to grow. I think it's a feature. It's not a bug. But of course, it doesn't fit all the investors' profile out there, for sure. And the risk needs to be clearly, declared and explained. But I think it's an important feature as the asset class is growing.
So the main problem right now, which we're also trying to solve with the regulators, is the non-existence. I'm talking about non-existence of pure decentralized finance entities, meaning that there isn't any intermediary in between that actually controls the funds and so on. And if there isn't a central intermediary, then what is the best way to regulate them?
Good morning from Beijing, China. My name is Emmanuel Daniel. I'm the founder of the Asian Banker, and I welcome all of you from a wide variety of countries joining us today on this masterclass called Building Trust, Compliance, KYC into Crypto and Decentralized Finance. That's an amazing set of words. It sounds very technical and it might be frightening to some of you. So we added the word masterclass because we want this also to be a primer for those of you who are new to the whole idea of the back end of cryptos, how the different crypto organizations are working with the regulators and the mechanics itself. What is it that we're looking at when we talk about cryptos, when we talk about stable coins, and we talk about CBDCs, the whole range of it. I am very, very excited to have with us Eric Anziani, the Chief Operating Officer of Crypto.com. All of us have been hearing about Crypto.com from around the world right now, Eric. So we are very, very happy to have you join us. So we've got a lot of questions for you about Crypto.com, what you do, your business model, and all of that. And we also have someone very important, Anson Zeall, who is an amazing activist, as you would, as I would call him, who's been putting together global associations that work with regulators and bring all of the different crypto players together. So he's well into the mechanics of working with regulators in building the infrastructure that we need to support, the crypto industry. And so Anson is actually the co-founder of IDAXA and Access. Anson, thank you very much for joining us. Let's start this conversation by asking firstly, two amazing guests and my friends, to explain what they do, okay, and give us a perspective of where the industry is right now. Now, I ask this question because when we think about how the internet evolved, there were points in the history of the internet where you can say it's a milestone, a marker. The point in about 2008 when the internet had 1 billion users worldwide. The point at 2011 where the mobile device became prevalent. It became the most important device in many countries and so on. Now, where are we with the crypto universe? And also tell us a little bit about your organization. So let's start with Eric.
Sure. I think we're not at the 1 billion user mark yet on the crypto space, but we've made tremendous progress in terms of making the technology more mainstream. If I look at the work from our research team at the beginning of the year, we had about 100 million users globally owning or using crypto. In mid-year, we had about 220 million users, so almost double in 6 months, and we'll probably hit 300 million users by the end of the year. So tremendous growth in the space, but still a lot to go. One of the big use cases we see that will definitely help the space grow is things that are happening around gaming and GameFi, where blockchain and games are start to connect. And we all know the gaming industry has 3 billion users globally. So it's going to be a big driver of the next wave of growth for the industry. But if I step back and talk a little bit about Crypto.com, just to describe it to the audience, Today, we're the world's fastest growing and regulated crypto platform. We serve more than 10 million users, and we really try to address all their crypto needs, whether they're trying to buy crypto with traditional money, they want to spend it with our Visa card at a shop online or offline, or they're just trying to grow their assets. And our mission is really to accelerate the world's transition to using cryptocurrency and to bring it to 1, 2, 3, 5 billion users globally in the next 10 years. So we really want to leverage that technology that you're talking about, blockchain, as well as the cryptocurrency that are built upon it. So we can help build what we aim for, which is a more fair and a more equitable world, especially for all the creators, developers, and the users out there. So we can give them the benefit of that technology in terms of true ownership of their asset and in general, better control over their money, data, and identity.
Now, in terms of product sets, which product sets does Crypto.com operate in? An exchange. You have your own token as well, and then and downstream, and upstream, what are some of the activities that you do?
Yeah, we operate in quite a few markets today. So depending on the market, the product offering is different. But I think we're really the entry point. So anyone who wants to get their first Bitcoin or Ethereum or any crypto using a debit card or using a bank transfer or any digital wallets that is relevant in their country, we enable that. So we offer today, depending on the market, from 100 to 200 cryptocurrencies for people to get access to, buy and sell. I think that's one of our, the entry use case for most people in the space. We also allow them to spend this cryptocurrency using a Visa card that is accepted at more than 70 million merchants globally. So it's a beautifully designed metal card with great benefits, cashback, free Spotify, free Netflix, where you can sell your crypto and use it for your day-to-day needs. So those are like the two major use cases that people come into the space. We also have an NFT platform, for example, for people who like to collect digital assets and representation of art or music, and we have that available for them to get introduced into the space and start connecting with creators and memorabilia. Yeah.
One question that we want to discuss here with regards to regulation and so on, which is very relevant to you as an organization, Crypto.com. Where in the world are you domiciled? The whole question of domicile is up in the air. I've visited a crypto processing center in Nanjing, and they were the first people who told me about Binance and CZ. And then I was thinking that maybe all the processing is done out of here in Nanjing, for Binance. And then there's Crypto.com, where when you bought into the naming rights for Staples Stadium in Los Angeles, Financial Times said you're a Singapore-based company. And then when I checked up your website, all of you are living out of Hong Kong. So talk to me a little bit about domicile.
Sure. We've grown quite a bit. We started in Hong Kong in the early days in 2016. Today, we're a global company. We have 3,000 employees across the globe, and we are working towards being regulated in all the key markets that we operate. And to be able to do so, you need to have offices in all markets where you want to get a license. You need to have hearts and minds in those markets, have compliance officers, have local GMs or MLRO to support your business locally. Singapore has always been extremely close to my heart also personally. I spent many years there and I still go there very often, as it was the first market where we launched our card product, which is really the flagship product of Crypto.com. And today we have a very strategic focus on Singapore, and we have a lot of our setup there, and we're growing very rapidly.
I'd like to interject here, even for Coinbase, yes. When they listed, you can see that on their documents, they also listed on the global address as non-applicable as well. So a lot of things are moving in that direction, because when you're on the internet, everything is borderless, but we still need to abide by the rules in the different jurisdictions.
Yeah, actually, that's a very interesting point you brought up, Anson, because you're saying that when Coinbase listed in the US, in their SEC filing documents, they stated their address as non-applicable. Can you imagine that? And it was accepted by the SEC. So actually, this whole question of domicile is a very, very interesting element of crypto players worldwide. And maybe Anson, you can. I wanted you to explain a little bit of what you do at Access and IDAXA in terms of leveraging regulators in the different markets. Is there a regulatory arbitrage taking place right now? The regulators themselves are sort of looking over each other's shoulders and saying, okay, at which point do we enter? How do we play this game? Is there something called regulatory arbitrage that when you are accepted by one regulator, the other regulator sees you more favorably, stuff like that?
So the regulatory arbitrage nature now is definitely very different compared to 5 years ago. So for example, 5 years ago, for the crypto companies, a lot of the regulators actually don't know much about what they're doing. So there's a knowledge gap for most regulators. So they're treating them as another normal company, and then they come into that country, but only to find out more about them than they understand what crypto companies are. So our first phase was a knowledge gap, so allowing them to come in, and then fear started setting in. And then the industry comes together to work and engage with the regulators. And now we have arbitrage in the sense where there are some regulators that are super far ahead from others. So you're working with them not because the regulatory arbitrage is to take advantage of the situation compared to like before. Now we're working with regulators that know the stuff, and there are some that are super left behind. So you will reach a stage a few years later that every regulator should know how to deal with the regulation. But definitely the crypto industry is trying to work with regulators where possible right now. So the nature has changed a lot.
Actually, Anson, at this point, tell me about IDAXA and Access. What do you do? And who have you been working with? Yeah.
Access is the association that I chair. It's Association of Cryptocurrency Enterprises Singapore. So we've been established since May 2014. So back then when we spoke to MAS as a number of our startups together, they thought we were just a gaming association, gaming geeks coming together, but we were actually trying to show them the advantages back then of Bitcoin and blockchain. But now we've evolved into a association where we have quite a lot of expertise in understanding global regulatory issues and challenges. We've also worked with MAS on code of practice with very big help from Crypto.com on the AML and CFT processes that all of the licensed VASP should be doing. And then it also gives the stakeholders such as MAS and other regulators and the banks to know that many of these companies do have a process when doing AML KYC. Now, IDAXA was formed 2019. It was more of a response of what FATF, Financial Action Task Force, has issued back in 2019, a set of virtual asset guidelines. So FATF calls it virtual asset, but essentially it's crypto. Okay? So these guidelines, some of the recommendations were quite strict, and it was quite a problem. And the problem is when we speak as Singapore, Access Singapore, we don't have such a strong voice. Crypto Valley Switzerland doesn't have a strong voice on its own. So we decided if we all come together as one voice, under IDAXA, under one umbrella, it will speak on the same level as government entities such as OECD, FATF, and so on. So IDAXA is a united voice of all the majority of the crypto associations around the world with the support of very large crypto companies. So some of our associations include Crypto Valley Switzerland, support from the Japanese associations, JVCA, JBA, We also have partners with Global Digital Finance, Chamber of Digital Commerce, Washington, Crypto United Kingdom, Crypto UK, Blockchain Australia, Indonesia, and so on. So all when we come together, we form a much stronger voice. So we have a platform called V20, which we hosted in 2019, 2020. We'll have a huge one in hopefully if COVID allows in Bali for next year at the G20 in Bali. And the issues we discuss is of DeFi, NFT, the definitions and how to go about it and so on. But most importantly, this is a platform for regulators to come to speak to the private sector. So it's not like a panelist sort of session where everybody just comes to talk. We're here to solve issues at the conference and come up with findings for both the regulators and the private sector.
Now, one of the reasons I wanted to talk to you on a program like this is precisely because you talk to FATF. When they say virtual assets, let me ask you this question. Does virtual assets also include CBDC?
For now, FATF has already got the instructions from G20 that the scope does not, in terms of AML CFT, does not include CBDCs, but the scope is for so-called stablecoins and the service providers. So CBDC, in my view, should also be within the purview because there's a lot of commonalities with, as they say, so-called stablecoins, but it's not in the scope of the guidance.
I'm just curious that FATF is not wrapping its mind around CBDCs yet, and it's been excluded from FATF, although it's part of BIS and other agencies that are trying to create that global element in there. In terms of IDAXA, some of the topics that you're working with FATF on, one of the biggest thing is interoperability, for example, between tokens. Is there a kind of a standards coming out in terms of something that all crypto players subscribe to that FATF can look at?
In the V20 conference, which was held in Osaka in 2019, alongside the G20 Leaders Conference, the main aim for that conference was to discuss the first guidelines that came out. And one of the stickiest point in the guidelines from FATF was the recommendation 16, which in the banking world is known as the travel rule. And Crypto.com was also attendee at the conference as well. So why is this sticky? Because banks, they have to fulfill certain rules in order to use the SWIFT system to send funds cross borders, right? If you don't fulfill all the compliance needed, you're not allowed to use the international banking system, and your banks the funds will only be stuck locally. Whereas in crypto, from day one, we are able to send funds regardless to who you're sending it to, right? Good and bad, of course. And because of that, when 2019, the guidance came in for us, in a way so-called forced upon us, we need to find a way on how to, one, continue sending, yet be able to share the MLTF, money laundering, terrorist financing information if there is, to the regulators, as well as sharing between the intermediaries. So when I was at Vienna speaking at the FATF private consultative forum, I made the point that it was important that we find a way, to do it. But we also need to be mindful, because it's so decentralized. Different companies will do things differently. So, for example, if Crypto.com uses compliance software A, Coinbase uses compliance software B, if they don't have a common way of communicating, then there's no point. It doesn't work. So we worked with different associations, co-led with Chamber of Digital Commerce, Washington, as well as Global Digital Finance, which is based out in London, to come up with a standard called Intervasp Messaging Standard, IVMS 101, which is the data model for these compliance softwares to use, so that once they have a standard data model, then at least from that standpoint, they can communicate with each other. And FATF knows about this and has written not saying the name, but have written indirectly hinting there is standards already work from the private sector. So yes, it's coming up. And if there are more standards that are needed, that when the regulators want to see, or when the private sector wants to do it, we will continue to work on that as well.
Eric, one of the interesting things that I realized when I saw your numbers, right? Crypto.com, annual revenue of 55 million, total funding of 36.8 million to date, 3,000 employees, 10 million users. How in the world did you afford to be able to pay $700 million to rename the Los Angeles Staples Center? I'm asking this as a conceptual question, right? So give us an idea of how your business is run.
We've been very fortunate to have a very strong and supportive community, and we've built a very large-scale business today. If you look, for example, our exchange business globally, we process $4 or $5 billion per day of volume, and we have multiple very, very strong at-scale product in our ecosystem that generate revenues for us. So we're able to reinvest into growth, into new business line, and to help the industry go mainstream. I think it's very important for us as Crypto.com, as our name is kind of the category, to support the industry forward. We are at the stage where this space is growing very fast, and that's why we're investing aggressively to help that growth and help the industry move forward, not only from a marketing standpoint, but also from a standard and compliance standpoint. When we started our business, there's two foundational pillars 5 years ago. One was compliance, the second one was security. And we've invested in both massively, and we'll continue to do so. Our view is that the industry would be regulated fully. So we started from that concept. We KYC'd and put ML in place for our entire set of customers from day one. We worked with regulators across the globe, and have been able already to acquire many licenses in key jurisdictions. We also work with all the international bodies to have the top certifications on cybersecurity, on data privacy, whether it's ISO, whether it's PCI DSS, whether it's working with the Chamber of Commerce with their NIST certification in the US. So we invested a lot in that space to make sure we have a robust foundation to help the industry go forward and for our business to last.
So when you talk about income streams, which ones are strong income streams right now? One of the things that fascinates me about crypto, and I'm a big fan, is because I walk into the offices of blockchain players who are creating supply chain architectures and so on with a token in it, and real things are happening, right? And then I come across people who trade daily, lending on their token and so on. So of all the activities, which ones are strong revenue generators for you today that shows the depth of the industry?
I would say today the industry is primarily driven in terms of activity by the trading use case, I think followed by payment use case. Those are, I think, the two major use cases we're seeing, and that's normal for a new asset class. NFT and gaming, those are the emerging ones. And I think the revenue from these business lines will be tremendous in the future years. But today is primarily around trading and payments. And payments is country specific. There are countries and regions where crypto payments is, really substantial. Is that the case, or is that global? Or is there a lot of payments already taking place in traditional countries, Japan, Singapore, US? I think for us, there's two types of payment rails. One is when we work with Visa, and so we use the traditional fiat rails, and we enable people to spend their crypto using that rail. And for that, it really depends on where we're available. So we started our journey in Singapore, then across Asia. We launched our own program in Australia. We cover 30+ market in Europe and UK. We're in the US, we're in Canada, and we just launched in Brazil. So wherever our card product is available, we're able to see that strong demand. And today we have about 70-80% market share in the crypto card business. So we've invested significantly in that part, and we see tremendous growth. Whether the market goes up and down, people love the product, and they love to have the ability to use these assets, which are virtual in nature, in the real world. I think it's very important. It brings peace of mind. You can at any time use those assets for goods and services. So that's very powerful across the globe.
Actually, your relationship with Visa, blows my mind, because this is like sleeping with the enemy. This is like the organization that should be spoken of in past tense by now. And yet they seem to be wrapping themselves around crypto. So explain to me a little bit about that relationship you have with Visa.
Sure.
What is this rail? I mean, is it just simply using the traditional rails and putting crypto on it so that you can use crypto on a transaction? The back end might well be good old-fashioned fiat money, right? So tell me a little bit about the relationship with Visa.
No, that is correct. And we've been working with Visa for 5 years now. And the last few months, we elevated our partnership. We became a global alliance partner with Visa, and also got the ability to issue our cards directly. So we're a principal member of the Visa network. I think it's very important when you look at bringing a technology to the mainstream to work with instruments that people are familiar with, especially in the payment space. And using your debit or credit cards is still extremely powerful and understood by most people across the globe. And I think it's a very strong entry point to get people into the space. We are also developing our own native payment solution called Cryptocom Pay, which is more like the Alipay of the world, where you have to scan a QR code and you can pay natively in crypto directly to merchants across the globe. That will take decades to build. It's also a very important business that we're developing across the globe to ensure we can offer both that native experience in crypto, but also something familiar to bring people into the industry.
Now, at which point do you think such a model will start to disintegrate because the direct crypto transactions become mainstream? At which point do you think it will start to go down? Because what you're saying is an interim measure because you're using platforms which are familiar with people. At which point do you think you can wean off relationships like the Visa, because the back end is old-fashioned?
Yeah, I don't think it's something that will happen in the short term. To be honest, the space is still small. It's still very nascent. There's so much space to grow, and we're keen to work with all partners like Visa to grow the industry forward. So I don't see that happening in the short term. I don't think also there will be just pure cryptocurrency out there in the world. There will be still fiat in countries. There will be CBDCs. There will be other forms of money out there. It's just not one currency that will dominate everything. So we want to create a world where people have options. They can benefit from the utility of these different options and be able to use whatever makes sense for them in their country, in their journey.
Now, when I think about your rebranding the LA, Staples Stadium, you're spending money that a Coinbase would be spending, in that the funding that Coinbase has is so much bigger and so on. Is there a business model in there that this money needs to be spent in order to maybe generate visibility, the justification?
The renaming of the stadium is one initiative out of few. We also partners with big brands like Formula One or UFC or 76ers, PSG, and then other football leagues across the globe. Really, our goal is to bring the technology mainstream because we believe it has very important benefits for individuals as well as creators and participants in that ecosystem. So we want to bring the technology mainstream. To do that, we need to communicate to a broad set of users about what is the industry about, what's the value proposition, and how it can improve their lives. And working with top sports brand and visible entities like AEG and the Crypto.com arena today, renaming is critical to that. And we've seen the receptions from customers, the feedback and the coverage that we get really makes the technology mainstream. And I think it's very important to drive awareness. And so we can grow the space responsibly and get people to understand and educate themselves about cryptocurrency, blockchain, even CBDC? What is it about? How can it improve, my day-to-day life?
Now, let me ask Anson the same question that I've asked Eric, which is which products are becoming, popular and potentially mainstream, that there's enough traction in there. I know that Eric, you're an active trader, for example, on the lending tokens. How big is that? And which products actually mimic banking on a token or exchanges on a token? And how important are these for applications that are being developed? I'm asking all these questions because there are regulators and former regulators around the world who are saying things like, crypto it's a wasted asset. It's not even an asset. It's and they don't say that about gold, by the way. Gold is a piece of metal, an unusable piece of metal, whereas tokens are actively being used to create ecosystems and so on. So just give us a sense of which are the most active areas and what are some of the issues, the problems that they have in becoming more mainstream.
Yes, sure. So yes, myself, I'm very active user for the different DeFi product, decentralized finance products, which I'll go on a little bit later, for two reasons. One is for myself to understand what is going on. And two, once you start understanding, you realize how they're doing it to allow that sort of, in a way, returns that you can get from the ecosystem. So that there's a lot of different products out there that in a way mimic some of the banking products, but one of the first narratives, most important, is the narrative of inflation. So because of inflation, as we know, US just hit a 31-year high inflation. That hits a very good narrative for Bitcoin, for example. A few months ago, there was a report published by Coinbase, or maybe it was on the Twitter of Brian Armstrong. If on the Google Trends, the searches for Bitcoin has exceeded gold. Basically, people are more interested in Bitcoin than gold itself because of the inflation story. So one is to hedge against inflation. That's one of them. And in a way, it derives from this as well. So some of the products that they have is similar to savings products, but has a higher interest percentage in return. So you put leave some cryptos there, you will have a higher percentage. Not only just normal cryptos, stable coins as well. There's also products into lending, products as borrowing, collateral, a lot of different things are from the banking industry. And I am very confident that a lot of bankers also moved into this industry and seeing how lucrative it is. So the main problem right now, which we're also trying to solve with the regulators, is the non-existence. I'm talking about non-existence of pure decentralized finance entities, meaning that there isn't any intermediary in between that actually controls the funds and so on. And if there isn't a central intermediary, then what is the best way to regulate them? FATF has basically hinted in their reports that they also don't have the experience to regulate non-entities in the space, because since the 80s they've existed. They've all been around regulating intermediaries. But if there isn't one, how do you do it? They've tried to go the extreme, which had a backlash in my view, of trying to regulate every single user that uses DeFi. For example, they had a point in that if you own a particular token that has these sort of functions, then you'll be regulated. But some of the tokens, such as Uniswap and many others, if you own a token, you also have a vote in the system. So does it mean you're going to regulate every single user? And if you do, how are you going to enforce? So there's a lot of these issues that we're trying to solve. And hence the coming V20, we're going to do like a very workshop-like thing, like in 2019, and see if there's something we can come up with. What sort of conclusions we can come up from that V20 on how to regulate this whole industry properly, but yet allowing it to grow and also in the interest of the private sector as well.
In fact, the managing director of the MAS, Ravi Menon, was quoted saying, regulation must not front-run innovation, right? And yet, every time regulators get into wrapping their minds around crypto, they are front-running already. And the regulatory approach for different jurisdictions is bizarre. And so from what you're saying to me is very interesting, because when the FDIC, or rather when the US regulators say that stablecoins, for example, should be regulated as a depository institution, they actually open the door up for cryptos to become banks. And so you've allowed the crypto world into your traditional world as a result. And then you have jurisdictions where cryptocurrencies like Crypto.com are now in a position to buy banks to get the license. So you've got that model possibly coming into place. And also from what you're saying, Anson, is that when the whole idea of being permissionless is that the node has its own governance structure, right? Now, do the permissionless cryptos are their governance structures sufficient as a regulator themselves? I mean, is there a regulatory element in there?
What I'm seeing now, at least from a user and with knowledge of what's going on in the regulatory space, it is improving quite a lot. There are a lot of products out there that do self-regulation. What I mean by self-regulation is not top-down, where there is a set of rules. Is when there are new proposals or when things go wrong, the community comes together to solve it very, very quickly. Instead of going back and forth with a regulator, they actually come and do it. And sometimes because they're not from the traditional world, there's a lot of innovation that comes in on how to solve these self-regulatory issues. I know also Managing Director Ravi Menon did say that he believes that regulatory from top down from the state is still substantially better than self-regulation. There's no exact lines, but it's around the point of saying that state regulation is still better. I'm open-minded on that. I'm not saying no or yes, because there are a lot of things from our industry that actually influenced the traditional banking sector. If you look at from a KYC perspective, because I'm also a user of Crypto.com, all the eKYC that has happened in crypto as well as fintech is now going into the traditional space. Okay, and it's all the new best practices that came out from crypto, including thinking about using CBDCs, which is inspired from blockchain. Stablecoins is also from the blockchain industry, going into traditional. So if we are influencing the traditional side, how can we say that traditional is going to be better than this? So there must be a middle ground where you learn from ones that are innovating without any background. Yes, they don't have banking background. I understand that, but they also, because they don't have a banking background, they think things differently, which can also influence on the traditional side. And the traditional side also can bring experiences into the DeFi industry as well. So then I believe the middle ground is the best and not one way or the other.
What you've just said about the crypto going into the traditional banking. So even the best practices in blockchain technology, it's there for banks to use for their traditional transaction banking services or even core banking systems, and they're not using it. They're spending so much time still nursing their original core banking infrastructure. It's bizarre. Now, let me ask you this question, and it's a point blank question, right? Are China and India, blocking out crypto entirely? Are they wrong? What would they be missing out on going, in the next few years?
Yeah, I don't think there's any right or wrong. I think regulators in each country, have a view on what makes sense for their citizens and how they want to protect them from financial risk. I would say in India, there's some recent development, and I don't think it's an outright ban. From what I hear from our teams on the ground, it's a little bit more nuanced, and some activities I think will be regulated, and I think that's the intention rather than just being left there or outright ban. So I think it's more about finding the right framework. Like we see, for example, in Singapore. I mean, there's one of the most progressive regulators that we've seen that has actually developed its own regulatory framework to cover, DPTs or digital payment tokens, those cryptocurrency. And I think some of the other countries want to replicate that and find what's the right framework to regulate these activities, whether they're on trading or lending and others. So I think, there's different cases, different approaches by regulators across the globe. I think in India, there's a lot of back and forth. These days, what we see is a little bit more around finding the right regulatory framework to support the industry.
In my view, like, for example, at the FATF meetings, and I know that both China and India are also FATF members. With the meetings that we had, the ones that were very active in those meetings are the ones that are have a very strong knowledge in terms of on the ground on what to do it's in their own jurisdiction. So the jurisdictions that we work very closely with, obviously the US, Japan, Singapore, Switzerland as well. Many of them are participating very actively in the meeting. So I do hope that the more and more of the large countries also participate in the virtual asset meetings. That's number one. And number two, if you look at India's current proposed rules, in a way, it's very similar to what Japan had. So they did not say outright ban. They are saying private tokens are not allowed, and the tokens will need to be approved and come up from the regulators themselves. So it's more like it is starting it rather than going back and forth with the Supreme Court back then. But now it's starting to move in a way where I feel they are talking to the private sector very closely, and then starting to open up when they understand more of what's going on. But as I said, if the larger countries participate in the international meetings on even on AML and all that, once they understand that, they should be much more nuanced and flexible in having a good framework for in their own jurisdictions with regards to crypto.
The reason I ask this question is that in China, I see incredible energy in building blockchain ecosystems and blockchain architecture. Everything from selling used cars to port authorities and so on. And many of these need a token in there that can activate the user base, especially if it's permissionless, right? And I see that to some extent, many of them are held back because of this blanket ban on crypto in China. Am I right to see it that way, or is there another way around it that can benefit from blockchain where there is a blanket ban on crypto? Do you think that a country will be held back on broader areas like blockchain if they over-regulate or if they put out an outright ban?
According to what CZ said in the Bloomberg New Forum, China is only banning the and also payments in crypto. But other than that, they are very pro on many different sectors within blockchain, like creating blockchain ecosystems and so on. In a way, they're supporting more closed loop systems, if what I am deducing from what I'm reading. So there is really no right and wrong. It really depends on the agenda of that particular country. If China is trying to push their CBDC, then there are some things that they may need to forego in order to put focus on that, and that's why maybe all these different bans, yet still trying to work with the private sector on how to make these agendas come true. And some like India, where they are starting to understand it more now, and yet the demand is there. They still need to find a way to take advantage of this in a way that it doesn't overwhelm the amount of regulatory knowledge they only have. When things go wrong, they at least can still control it.
So it's regulators, overreacting and then pulling back when they feel like they have better control. Is that what you're seeing? Or?
Yeah, what I'm seeing is, compared to 5 years ago, there seems to be less of a knee-jerk reaction now. Back then, you will see countries like Thailand, you will ban one day and unban, and then ban again and unban, which makes the investor community lose confidence. But now you can see, after understanding how it works, Thailand is also flourishing in terms of cryptos. So I see what all these things happening is because of the lack of knowledge. So there are already places where you can fill that gap, like working with international governmental entities like FATF, which works with the private sector. We're now going towards that, and having less of these bad knee-jerk reactions will help, because a lot of jobs, especially for example Singapore now, has a lot of jobs from the crypto sector, right? If you have a new sector that creates more jobs, I think that is it's a very big incentive for governments to keep.
I'm going to ask you a conceptual question, and because in there it's a lot of issues loaded in there. Is a CBDC a stable coin, or CBDC is a form of stable coin? It's a conceptual question, and I think Eric can help me answer. Are stable coins an important part of your business, mix of what you do?
I think stable coins play an important role in our ecosystem because it allows people to go back and forth between assets that are deemed more volatile versus assets that are deemed more stable, at least, versus fiat currency, if we don't account for inflation these days, which is pretty high. And so they play a big role. It's also easier for people to understand and to use, especially in the merchant use case, where they do need some stability in terms of what comes in and how they can project their revenues and all these forecasts. So it's a big part of the industry, and it has a useful role in payments in particular, and as a source of kind of stable place versus fiat globally. CBDCs are actually, people have been working on it for quite some time, but in practice, there's very few countries that are live, and probably none that are live globally, full scale within their own market. So it's still very early. There's a lot of discussions, a lot of exploration, experiment in many jurisdictions, but it's not really a live at scale concept. And CBDCs are not meant to be on blockchain per se. And by blockchain, I would mean permissionless and open source blockchain, where stablecoins are today. So they will be in more closed loop environments. And we don't know yet whether they will have programmability, which is a very important feature in permissionless blockchain, where people can build all these new financial applications because they can program with smart contracts and define these contracts between users without intermediary, and something that people can verify publicly. So I think those are two different things. They do provide some form of stability versus a fiat currency, and they share that commonality. But the infrastructure they will be likely built on is different.
In fact, the infrastructure is, as you say, it's a closed loop. Therefore, the data stays with the regulator. And it's funny because if you're going to build applications around it, you want the data to be in the system, right? Accessible to the application developers. Is that what, am I right to think that way? For
innovation to flourish, of course, if you have an open source ecosystem, you can see the pace of innovation is incredible. That's what we've seen in DeFi since especially summer of last year. Having the ability to iterate and improve very quickly on what people are building, it makes a extremely fertile ground for innovation and bringing value to individuals. Of course, in closed loop, closed source ecosystem, it's much harder to get more value and iterate that way, for sure.
You didn't speak very much about NFT. You spoke about it as a up and coming area. Stable coins in NFT?
NFTs, first, I think it started really with the art scene. So it really has a digital ownership of her art piece. And that was kind of the original use case that we see. Now it's growing across multiple verticals, whether it's music, whether it's a connectivity with a brand, a sports brand. We've worked with UFC to connect their fans with the fighters, with the events that they're building. There is NFT being used in ticketing to showcase your identity across multiple platforms. So it's super exciting space. We are trying to contribute as much as we can. We've built a platform for that. We're working with creators, with brands to see how they can better connect with their fans and their users and bring them value. It's fascinating. I think one point I will add is that NFTs also create new communities. As we've seen in the early days of crypto, NFT, especially with the new avatar, what we call PFP type, like CryptoPunk or Bored Apes, or even the one we launched recently, Loaded Lions. It's fascinating to see how people connect and get together around these communities, create benefits and value, and have a way to express themselves and create something that has never been done before. So I feel NFTs have that community power that can generate a lot of value.
I am still confused as to why the media is confused with the definition of stablecoins and CBDCs, because they are two very, very different things. Okay, so stablecoins, I think first we need to understand why stablecoins came about. More than 5 years ago, when many of the crypto companies came out, especially the exchanges, many of the trading pairs that they have in the exchanges were usually like Bitcoin / USD, Ethereum / USD, and so on. And most of the operations rely on having real US dollars in the bank. That means your operations also require a bank account. But many of the banks, which were fearful of the industry, started closing all these bank accounts of these crypto companies. When you do that, it's very disruptive for many of the service providers, the exchanges. So many of the entrepreneurs came up with this concept called stable coins, where in a way the risk is offloaded to them. They have a huge bank account. Simply speaking, there's a lot of nuances in between, where supposedly having $1 US in the bank will mint one stable coin. Okay, so one Binance stablecoin BUSD will have $1 of US dollars in the bank account. Okay, so and then this way it reduces the risk on the companies, because many of the exchanges can now run the exchanges without worrying of losing the bank account because they don't need it. For example, Binance.com, the entity itself does not need not only Binance, lots of exchanges don't need a bank account to have the operations to go. Exchanging to fiat is another question. So stablecoins came up from there, but because of that, there's so many different use cases now. Now, the difference between stablecoins and CBDC is huge. Okay, one is that stablecoins leverages on existing supply of the currency. So meaning if you are a stablecoins holder, stablecoins issuer, you have liquid US dollars sitting in the bank account. Whereas a CBDC, according to the definition of what China has, it affects the actual money supply, the M0 supply. So for every CBDC that comes up, it actually factors into the whole money supply that the country has. Okay, so it's a very different thing. So if a stablecoin issuer screws up per se, it doesn't screw up the money supply, whereas CBDC it does. And not only that, there's a lot of political things you need to consider and how it's being done. So for example, the Chinese one, they believe the model of being transparent, where all your transactions are being seen by the government and entities is the way to go. Whereas the Swiss one, they have a white paper that writes that they believe a private CBDC is important, where the Swiss bank would do a blind signature, and then the AML and CFT processes are done by the intermediaries. Just like the cash, they don't know where the the CBDC has gone to. So that's why governments are still considering the different use cases. It's very different, and I don't know why the media is still trying to combine both definitions in one.
Actually, there are stable coins in many countries, many jurisdictions now, Kenya, Singapore, and so on, where the regulator is thinking about, the role of stable coins if it's already available. There is a question here: can the crypto valuations be restricted and made less volatile by controlling their price fluctuations in cap and collar for a given time, time frame, so that to make them more trusted? The volatility of cryptos right now, how do you think it's going to play out in the future? Maybe Eric first, because you actually make money from the volatility. The interest in speculating on crypto. So, at which point do you think volatility will become more manageable in crypto?
Yeah, it's a great point. I mean, as you are on a nascent class, you want to have some volatility for the asset class to grow. I think it's a feature. It's not a bug. But of course, it doesn't fit all the investors' profile out there, for sure. And the risk needs to be clearly, declared and explained. But I think it's an important feature as the asset class is growing. And of course, as it matures, volatility will progressively go down. No doubt about it. But for sure, related to the question, I don't think anyone here wants to intervene and on prices. This is a market-driven industry. So supply and demand makes the price. But we do expect as time and as certain cryptos also within that asset class are become more mature, that volatility will reduce.
In fact, that's my interview with Chris Giancarlo, who, as chairman of CFTC, introduced the whole idea of futures, right? And he, in fact, he actually launched the first futures exchange for Bitcoin against, according to him, against the advice of other exchange players. So, do you see products like futures, derivatives of crypto coming into the marketplace? Do you see some of the liquidity providers going into the derivative space?
No, for sure. I mean, as we've seen the traditional finance space, derivatives are very useful instruments, especially for institutions. They are also helping on the volatility or hedge against volatility, which is very important. And I think it's great for the industry to progressively get to that level of sophistication. So we have more players participating. There's more ways for people to hedge and protect themselves. So I think it's a good development. But of course, it is even more regulated type of instruments. And for us, for example, in the US this week, we announced we acquired 2 CFTC regulated derivative platforms, and going to be able to offer that, for example, to US customers. But the bar and the levels that is required for people to offer derivatives at scale is much higher. And I'm welcoming people in industry to take that regulated approach to offer these services, especially to retail investors.
Firstly, the US dollar itself, since the 1900s, has lost over 95% of its value. I just want to put that out first. So that's why the inflation story is really a serious one. Trusting it is not really a relevant story. It's more like, how do you now protect from a capital perspective with regards to inflation, right? So the thing in terms of trust, it's really by looking at how the industry grows, and over time, when people see more of this, the trust starts building in. As I mentioned, that in the US, the searches for Bitcoin already surpassed gold by quite a bit now. It definitely also has been affecting the price of gold as well.
I have another question here. How's the gap between fiat and crypto going to be bridged efficiently?
In my view, it's really dependent on what the market wants at that particular time. And once acceptance is here, then you will see how crypto and the relationship between crypto and fiat will evolve. One example would be I did a crypto startup many years ago. Obviously, I was a huge Bitcoin fan and thought that Bitcoin was, like the currency of choice. This is back in 2014, but people back then were not ready. If you introduce the product that people aren't ready, then people will not use it. Back then, we also were trying out to use the QR codes for people to use, because we actually see that it will become useful. And only until the pandemic, these days, these recent few years, then the behavior started to change. So it really depends on the time, and then what the market wants. The relationship between crypto and fiat will evolve together on what the relationship is. It's not really up to what we say.
Yeah, when Eric mentioned that they work with Visa to issue a crypto Visa card, they're actually bridging that gap. And when we talked about stable coins and CBDCs, that's another attempt at bridging the gap. And there is a technology gap as well as a macroeconomic gap to be bridged. The technology gap is when a CBDC looks like a crypto. A macroeconomic gap is that fiat money, the way in which it absorbs inflation, the question is, will crypto be able to absorb inflation and create assets that are viable in the long term going forward? So there might be a winner and a loser eventually. And I think that regulators started with being very reactionary towards crypto, and then slowly they're enveloping their own ideas, using crypto technology and whatever they're learning, from crypto. Here's a question for Eric. Crypto.com launched a blockchain called Kronos. What is the aim of this? Is it to offer more DeFi, GameFi products? And what is Crypto.com doing to accelerate that? What do you think are the critical success factors of getting Kronos off the ground?
We're investing heavily in infrastructure in the blockchain space. We want to build open source, permissionless, scalable blockchains for people to build upon, especially creators and developers, and create ecosystem around it. So this is where we play really at the infrastructure level. We're providing a blockchain that is also environmentally friendly. So in terms of the impact on the environment, especially versus some of the proof of work blockchain out there. And we see Kronos as a place where people can build DeFi application, GameFi, NFTs, and we already have 50 plus projects after a few weeks that are being built upon it. A billion plus of TVL, 4 million transactions. So it's fascinating to see. For us, for it to be successful, it needs to be open. We work with developers across the globe. We open source the code. We contribute from our perspective. We get inputs also from the community. And that's, I think, a very key success factors compared to some of the other players. It's really to, give back, open your code, let people participate. I think it's very critical. And as mentioned at the beginning of the call, I think it's a good wrap up as well. GameFi is going to be super big. We see Kronos as playing a super strong role there, but we'll have to build the interfaces for game developers to connect and use the blockchain technology very easily. And that's going to be quite critical.
Last question to Anson. What's wrong with Binance, and why are all the regulators, looking for Binance? Not that you can find CZ anywhere, but I want you to answer that question just as a wrap up. To give us a sense of what are some of the regulatory issues that we are facing today.
Right or wrong, I don't think it's for me to answer. Because of the different business models that's happening between the different exchanges, some of the regulators are not comfortable with it. But I do see from the AML CFT's standpoint with FATF, that regulators are now gearing up at least to show that they are doing something after many years, the last few years of not doing that much. So I think it's part of fintech and crypto to continue to, I won't use the word fight, continue to work with the regulators, okay? Because engagement is key. We've experienced this before. If regulators come down hard on the industry and when there's still a lot of demand, the only thing that happens is everything goes underground. And then the prediction of this is after a year later, you will have to open it up again. Okay, so it's important that companies like finance, I know they're working with regulators. Regulators also need to be patient to listen to both sides, right? You cannot just do things one way.
Thank you both very, very much. Just talking to both of you, I'm learning too, and I'm coming up with my own ideas in terms of how this whole industry is going to take shape and how crypto is going to change everything we do.